So a house just like the one you want to buy is sold for €300,000. You've saved a decent deposit, your finances are in order. Should you go out and buy that house confident in the knowledge that €300,000 is a fair price? Of course, individual circumstances vary. But aside from house prices, there are other guides who can help you determine whether the house is actually worth it. These include the house price to wage ratio and comparing the cost of renting with the cost of buying. These measures are by no means exhaustive, but they can help you give a higher perspective on what is actually happening in the housing market. And let's be clear here. The big worry is not whether €300,000 is a fair price now, but whether the house will still sell for at least €300,000 sometime in the future. This is important because most people will need to borrow money over a long period of time to buy a house. If prices fall, they could end up owning a property worth less than the amount borrowed. And falls in house prices are common. House prices in the US, despite some gains in 2010, were still below their peaks in 2006, and some cities were at the same level as in 2000 to 2003. In the UK, average house prices rose in early 2009 till late 2010, but even then only just matched the levels recorded in 2006, 4 years earlier. In some other European countries, house prices fell in 2009 and 2010 to multi-year lows and are unlikely to recover their previous peaks for many years. Meanwhile, house prices have been generally stable in Germany for almost a decade. As for Japan, house prices are still 40% lower than in 1990, 20 years ago. That is why considering longer-term guides to house prices can be useful. First, the house price to wage ratio. This guide compares the average house price to average wages over a long period of time. It taps into the theory that house prices cannot be sustained above the ability of people to pay for a long period of time. The appropriate level of the ratio varies from country to country, and experts will argue that high or low levels of the ratio can be justified due to circumstances. Understanding these arguments and whether these circumstances can be sustained will give you a broader view of what's happening in the housing market. Secondly, the renting versus buying comparison. If buying becomes much more expensive than renting, the market could be overvalued. When looking at the cost of buying, don't just consider mortgage payments. Add in costs such as insurance, maintenance, and fees and taxes incurred when buying the property. These can add up to significant amounts. These measures can help you gauge conditions in the housing market. They can add to information from house price indices and recent sales. One thing is clear. Buying a property simply because prices increased over the last couple of years can be financially dangerous. Be aware, investing in property, like any other form of investing, carries risks. Once you've carried out the basic comparisons and are aware of the risks involved, you may want to put an offer in on that €300,000 house. Want to know more about economics? Go to economist.com. Economics made easier.